the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking space. Today is August 17th and I'm Nazia Iqbal. In today's show, our cover story explains why the RBI wants transparency around home loan tenure increases. In the banker's view, we have with us Ravi Subramanian of Shriram Housing Finance. For our Banking for You segment, we will decode conversational UPI. Our consulting editor, Tamal Bandyopadhyay, joins us to discuss implications for lenders following a case against a non-banking financial company for abetment of suicide. At the end of the show, we will tell you the results of last week's poll and the question for this week. While unveiling its bi-monthly monetary policy, the Reserve Bank of India on August 10th said it would shortly come out with rules to increase transparency regarding changes in the interest rate and tenure of floating rate loans. The RBI's move comes amid reports of home loan repayment periods being extended to as long as 50 years in some instances after the central bank started raising the repo rate in May last year. So why does the RBI want transparency regarding the increases in home loan tenure? Bhashwar Kumar brings you the answer.
Do you have unanswered questions about the recent increase in your home loan's tenure, your EMI, or both? If the answer is yes, then the Reserve Bank of India has some good news for you. On August 10th, the central bank said it was proposing to increase transparency regarding the changes in the tenure and interest rate associated with floating rate loans. After RBI commenced its repo rate hike cycle in May 2022, home loan borrowers were hit by an increase in their monthly repayments, or extensions to their repayment tenures, or even a combination of both. That's because most of these loans are pegged to external benchmarks, like the repo rate. In certain cases, the repayment period was extended to up to 50 years. According to reports, some borrowers found that they would have to make payments even into their 70s and 80s as a result of the extensions. Explaining the rationale, the RBI noted instances where the duration of floating rate loans had been unreasonably elongated without proper consent and communication. Thus, the RBI has decided to establish a conduct framework for lenders. Within the framework, the lender will have to clearly communicate with the borrower regarding adjustments to the loan tenure or the equated monthly installment or both. Lenders must also provide borrowers the option of switching to a fixed rate loan or the foreclosure of loan. Furthermore, transparent disclosure of various related charges will become mandatory. RBI Governor Shaktikanta Das said that the banks themselves must assess whether a tenure extension was unreasonable. While considering the borrower's payment capacity, banks must also consider the borrower's age. Das stressed that it was necessary to avoid unreasonably long tenure extensions, which could camouflage underlying stress in the loan. Das clarified this would be a commercial decision taken by the banks, with the RBI only providing broad guidelines. All retail loans sanctioned from October 1st, 2019 have been linked to the repo rate. Home, automobile, and personal loans have floating rates. While repo rate linked loans have increased the transparency of retail loan pricing, media reports have cited experts saying that communication between lenders and borrowers can still be more transparent. In a surprise move, the RBI Monetary Policy Committee opted to maintain the policy rate unchanged at 6.5% in April 2023, after 6 consecutive hikes. Till that point, the MPC had increased the policy rate by 250 basis points since May 2022. This increase in the repo rate between May 2022 and February 2023 impacted home loan rates by around 300 basis points. Amid such repo rate upswing, financial institutions typically increase the tenure of loans rather than increasing the EMI amount. In some instances, this has led to a situation where borrowers have had their loan tenure increased by up to 20 years without even being aware of the increase. Borrowers who took a loan during 2019-2020 have been the most impacted. Against this backdrop, what do the experts have to say about the RBI's drive for transparency on extension of home loan tenures?
With the borrowers, there are two sets of conditions. One, of course, is the kind of freedom that the borrower should get to choose between an increase in his EMI amount or increase in the tenure. Under the contract, that kind of, let's say, communication was essential, which I thought was missing. So what banks started doing is on their own, they decided that they will push the tenure, and that creates two sets of problems. One is it really makes the borrower repay that amount over a much longer period. So they may complete their working life and it goes beyond their working life. It does become very difficult. But the second and more important is RBI is also equally worried about this systemic risk in the banking system itself. Now, where does that come up? I'll explain. You see, what happens is that if you analyze the so-called expected life calculations, or the probability of default calculations of the banking system, they're totally linked to the tenure. Now, the longer the tenure, the more the probability of a default happening, basically. Now, it's a matter of communication, quite seriously. The banking system should have first analyzed its own asset liability mismatches, with a tenure getting pushed up, with a probability of default increasing. They should have really examined that. And the second is they should have given the freedom to the borrower, quite seriously.
With this 250 basis point of hike that we have seen in the last 1.5 years, I think after a certain point of time, this extension of home loan period is also not helping. And then it becomes a combination of extension plus increase in EMI. Now, the concern is, RBI has clearly mentioned that the threat of inflation is not over yet. We might see a scenario where, the interest rates might further go up, though we have, the governor has taken a pause right now. But again, the caveat is how does this inflation pans out is yet to be known. And in this backdrop, if my loan paying tenure exceeds my earning years, then I'm in a trouble. Then the chances of defaults might creep up. And where RBI is trying to tighten the news is that it should not be the case where a lot of potential default is being brushed under the carpet in the disguise of extended home loan periods. So that's where RBI is getting concerned.
The reason the RBI wants transparency on home loan tenure increases is twofold. First, to ensure that borrowers do not suffer under an undue burden. And second, the central bank is concerned that long tenure extensions could possibly mask underlying stress in the concerned loans.
While the first story dealt with the borrower's interest, our next segment will take you to the other side of the equation, the lender. Shriram Housing Finance has had impressive growth with its focus on affordable housing. In the past 4 years, its asset under management have increased by a compound annual growth rate of 44% and will soon touch the 10,000 crore rupees AUM mark. The company's MD and CEO, Ravi Subramanian, spoke with Raghu Mohan on its future trajectory.
Welcome to the BS Banking Show. Good to have you here.
Oh, it's a pleasure. Pleasure to be on your show.
How does the affordable housing market look at this point in time?
In the entire affordable housing finance cycle, this is probably the best time. I've been in this market for the last 5 years, and I've been running Shriram Housing for the last 5 years. And at no point in time did the market look better than what it is looking right now. Despite all the rate hikes, despite all the talk about slowdown, etc., I think the market is at its peak, portfolio quality at the best, revenues and profitability pretty good, and the market is robust. Every single housing finance player is reporting good numbers.
With the merger of HDFC Limited with HDFC Bank, The entire affordable housing segment is in the hands of HFCs. How do you think how do you see this playing out in the affordable housing segment?
In fact, we think that the entire affordable housing finance sector is in the hands of HFCs. If you go back and look at the banks today, banks with their large distribution in rural areas and hinterland, banks also play a very large role in affordable housing finance, especially in loans with ticket size of 20 lakhs, 25 lakhs. Banks like State Bank of India and others are very, very large players. But yes, with the merging of HDFC and HDFC Bank, a little bit has changed in the sense that a lot of stuff which HDFC used to do in the past, the merged entity may not do. A lot of money which used to go to HFCs and NBFCs earlier now will come our way. So the affordability, the money available for HFCs and NBFCs has actually gone up. But specific regard to the customers and the fulfillment of the needs of the customer, markets opened up, larger market at our disposal. But having said that, I think a lot of it will be driven by availability of capital and availability of funds, right? It's not, the market was never the limiting factor. The limiting factor for the segment was capital availability and how much of debt comes their way. The liability side was the more what do I call it? The liability side was the more normalizing factor for the segment than the advances side.
How do you see the liability side of the game playing out from here with interest rates on the rise?
So I would tend to imagine that the interest rate has kind of peaked out. At best, you may see a 25 basis points here and there, but by and large, I think with RBI managing the monetary policy quite tightly, the objective of RBI in controlling inflation has by and large been achieved without really compromising on growth. So I don't see interest rates going up significantly from now on. I also don't see the interest rates coming down significantly very, very quickly. So this will be, I guess, it'll be about 3 to 4 quarters before we see a reversal in the cycle. But once that comes in, it will also impact the HFCs and the NBFCs very positively.
Can you give us a sense of your ambitions at this point in time in terms of expansion and growth in the market and growth markets?
So we've just hired about 600 people in this business, okay, as of April 1st. We had 1,800 people as of April 1st. And as of now, we have 2,500 people in this business. We have expanded our distribution in the north. And as against last year origination of about 4,100 crores, we will be originating about close to 8,000 crores this year. That will take us from about 8,000 crores of AUM to about 13.5 to 14,000 crores of AUM by end of the year. FY24 will be about 14,000 crores. And FY25 and FY26, we will get to about 25 to 28,000 crores. If we get there, Raghu, we will be the largest affordable housing finance player in the country. And internally, in our strategy meet in April this year, we have set ourselves an ambitious goal of being the #1 affordable housing finance company by FY26 in 3 years' time. And I am reasonably confident, given the team that I have, given the people that I have, given the way we do business, and given the markets that I operate in, that it's just a matter of time.
I take you to your previous point that you made, that growth will depend largely on the amount of capital that HFCs can raise.
Correct.
And given your scale of ambitions, are you somewhere hinting that inorganic growth is also on the cards?
See, I was one who was pursuing inorganic growth at some point in time. There was a point in time when I was looking at opportunities in the market to acquire. I was looking at other HFCs which were willing to sell. But now there are 2 things which come in the way, and I will elaborate both the things. One is that we've grown. In fact, we've just crossed 10,000 crores yesterday. That makes us the 3rd housing finance company in the affordable housing finance space to cross 10,000 crores. Most of the other players are reasonably small who are up for sale. Now, what sense does it make at this point in time to acquire a 2,000 or a 3,000 crore affordable housing finance company, which does not give you any advantage in geographical distribution or customer segment? Now, that's equivalent to about a quarter's acquisition for us. No point paying 3 times book and 4 times book to acquire something which I can originate in a quarter or quarter and a half. If something gives me 2-year, 3-year benefit, yes. But something which gives me 3 to 5 months benefit doesn't make sense. So that is one issue which is coming in the way. 2 is, I think, the valuations in the sector are very right. So somewhere on the cost benefit analysis, acquisitions doesn't really make sense for us at this point in time. Though we are still looking out, if a sizable player comes up and is willing for an acquisition at a reasonable price, we will always be interested in that opportunity. But such opportunities are very few and far in between in the sector at this point in time.
Can you give us an update on your co-lending relationships at this point in time?
We have signed up co-lending relationships with SBI, with Axis Bank, and now with Punjab and Sindh Bank. All these three are working at different levels of efficiency. My guess is by end of this year, if directionally co-lending is any hint, out of the 8,000 crores that we will originate this year, about 10% will be co-lending.
Ravi Subramaniam, it was wonderful having you on the BS Banking Show. We look forward to having you again sometime later. Have a good day.
Thank you very much, Raghu. It was a pleasure talking to you.
In this week's Banking for You segment, we decode conversational UPI. Artificial intelligence is set to elevate your banking experience to another level now. The RBI recently proposed the use of AI for making UPI payments. It means very soon you will be able to engage in a conversation with an AI-powered system to initiate and complete transactions in a safe and secure environment. Shine Jacob takes us through its various aspects from the concept to its practicality.
India's digital banking ecosystem has been fast evolving and has transformed the customer experience in the last 2 years. Indian banking is also adopting artificial intelligence or AI-based solutions for better digital banking. These solutions include the use of chatbots to assess customer responses or craft responses for customers. These AI systems try to understand customer sentiments through natural language processing. At present, almost half of the country's digital financial transactions are done through the Unified Payments Interface, better known as UPI. On August 10, the Reserve Bank of India, or RBI, proposed the incorporation of conversational payments into UPI through artificial intelligence. Here is a look at what is in store for customers. What is a conversational payment? Conversational payments are those payments processed through a live chat or messaging conversation. This may happen with the help of a chat operator and through a payment provider. Through this, a user will be able to make payments directly through a link shared by a chat operator without redirecting to the UPI application. According to the RBI, this will enable users to interact with AI-powered systems for making payments, revolutionizing the instant payment sector in India. The move is aimed to increase the penetration of UPI payments to rural parts of the country. How will this new system function? Details of the conversational payment mechanism are awaited. The National Payments Corporation of India is expected to issue guidelines on this matter soon. Reports indicate that this conversational UPI payment feature will initially support Hindi and English languages, with plans to extend it to other Indian languages in the future. Users will be able to access this facility using both smartphone and feature phone-based UPI channels. One key advantage of the system is that the intervention of a third party is avoided, and a user can make payments with the help of an operator directly. While it may turn out to be a safer mode of transaction, another advantage will be that the operator will be able to get instant feedback. The role of AI in the operating side and user convenience side is yet to be clarified. However, this may well extend the possibilities of AI in the digital payment space. At present, private sector lenders like HDFC Bank and Axis Bank are aggressively using AI for their operations. reportedly through EVA chatbot by HDFC Bank and the use of ChatGPT by Axis Bank to improve customer services. What is the status of UPI in India? UPI Lite was launched in September 2022 to reduce transaction failures and optimize processing resources for banks. To further boost this, RBI on August 10 proposed the introduction of offline payments on UPI using near field communication or NFC technology. This is to be introduced through the UPI Lite on-device wallet. NFC is a short-range wireless connectivity technology that allows a phone and a payment terminal to communicate with each other. This will help in using digital payments in areas with low internet or telecom connectivity and lead to minimal transaction failures. Moreover, the central bank has also proposed to increase the transaction limit from Rs 200 to Rs 500 per transaction on UPI Lite, with the overall limit retained at Rs 2000 per payment instrument. UPI transactions touched the Rs 15.34 trillion mark in the month of July, up 4% from June 2023. In terms of volume too, transactions saw a 7% increase from June to July. With conversational UPI, these numbers are likely to rise even further.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The death of art director Nitin Desai by suicide and the following case against a non-banking financial company for abetment of suicide have raised many questions and implications for lenders. Ruchika Chitravanshi discussed some of these questions with our consulting editor Tamal Bandopadhyay. Here's the chat.
Hi, Tamal. Welcome to the Business Standard Banking Show. This week in your column, you've talked about the suicide of art director Nitin Desai. Now, we've heard of people committing suicide after being in heavy burden of debt before as well. But how common is it that the lenders get sued, and what are the implications of this whole story now?
You have been talking about, yes, suicides for inability to face the debt burden. And very often the banking system is not involved in that. It's basically the money lenders also, or primarily money lenders. And it's, and I think you are mentioning about the farmer suicides, which are very common in India. But this is a sort of, in a very different case. It's a corporate loan, you have to remember that. Now, after becoming a defaulter, inability to pay, and then it has gone through NCLT, the entire process has been done. And then this person committed suicide. It's an extremely unfortunate case. And his wife went back, went to the police, and also filed an FIR. And basis that now the police has gone to the court. So we need to see, but prima facie it looks like all the procedures have been followed, which under the IBC Act, which came in force in India in 2016, what you need to do. And have gone through the NCLT order, etc. So it looks like the gentleman he admitted to default, but then that's it. I mean, it's a very, very unfortunate case. I'm sure there could have been options before him, but I'm afraid I will not be able to tell you how often. A person concerned, I mean, after the suicides, lenders have been taken to court. Honestly, I have not come across any instance so far.
In your column, you've also talked about how the personal insolvency law has not been stabilized. So I just want to get your perspective from the legal side. What are the remedies that are available to both the lenders and the borrowers as well? I mean, how important it is for you think for us to have a strong personal insolvency law?
Looking back, we have got the IBC in record time. It's a very fast it happened in India. We're the fastest way of getting that insolvency code globally. That's what can happen in India. And you have to see that it followed the so-called AQR asset quality review of Reserve Bank of India, which unearthed sort of the soft underbelly, exposed the soft underbelly of the banking system. Bankers were laden with the huge NPAs, and then the NPAs need to be cleaned up. And then if you didn't have an IBC, how do you do it? That's how the IBC came in. And the famous dirty dozen, that was used by using IBC. And then at the initial stage, the recovery from the banking system was pretty high, but then there have been many hiccups. Like any new law comes in, it's still a process. Now, meanwhile, what is this personal insolvency that you're talking about? Now, there are two types. One is this, is that even now you can go for personal insolvency, provided it's a corporate loan. For instance, somebody has given a corporate guarantee. A guarantee for a loan, assets, etc. So that person can go for a personal insolvency. There have been cases, I would not like to name them, but in this case, probably Mr. Desai could not have gone because the assets were there. He was not insolvent as such. And the other part is the non-corporate personal insolvency. Now, IBC is already IBC has already framed the laws for that, and this will not be dealt with with the NCLT. It will be for the DRT, the Debt Recovery Tribunals will do that. But the rules and regulations are yet to be in place. That's a non-corporate personal insolvency. But in terms of a corporate entity, an individual who had given a guarantee for a loan under the current IBC, that person can go for a personal insolvency.
The July inflation data has exceeded all projections. What is your reading of this, and what is going to be the fallout?
Well, reading is inflation is here to stay. It looks like pretty high. Yes, it beyond all estimate. But primarily driven by food inflation, and food is roughly about 40% in the inflation basket. Now, Reserve Bank of India held on to its policy rate, but it did say that you to keep a very close watch on inflation. It also raised the projection for inflation for the year. Now, will that be enough, or do we expect some additional action from the Reserve Bank of India? For instance, it did the temporary CRR raise. It is done 10% on certain amount. And now, will it continue to have some kind of tightening, or will it go for a rate hike? Those are the questions we are asking ourselves. It looks like, yes, inflation will remain at an elevated level for the next few months, at least in October, September. Because if you read the food baskets, I'm not getting into the items wise, etc. Tomato is one of the things, but it's not the only villain. There are other stuff as well. So it's more we need to I think it's a government's responsibility to address certain issues on the supply side issues, etc. We need to also keep our finger crossed the progress of monsoon, harvesting, etc. The good part of it, the core inflation, which is non-food, non-oil inflation, is coming down marginally. It dropped below 5%. No, if I'm not mistaken, 4.9%. That's a good part. But food inflation has come with a lot of vigor at this point of time. I think it will stay at an elevated level for the next 2 months as well. But RBI will keep a very, very close watch. I would not expect a rate hike as such, but the rate cut, the end of this cycle, will come much later than we had anticipated. Certainly not in this fiscal year. Probably in the second half of next fiscal year, because Reserve Bank of India has been continuously saying, governors have been saying, that our objective is to get the 4% inflation, not 6%. Our flexible inflation target is 4 plus minus 2 percentage point. It's between 2 and 6. So he is not willing to, compromise on that 4% part. As long as that is his motive, and I'd like to believe, and also you need to see the election near next year election there. So can he afford to let his guard down and cut the rate, etc.? It doesn't happen, because inflation is always an election issue as well. So our fight against inflation will continue. Probably no rate hike, but the tightening bias will continue, and RBI will find probably newer instrument. Liquidity should not be aplenty in the system.
So tightening has to continue, and that has to be the stance of RBI. And as you said, inflation is something we have to watch out for in the days to come, especially food inflation. And thanks for telling us all about the whole structure of debt resolution and how we have in place systems for corporate insolvency resolution. But for personal insolvency, rules and regulations still need to be formed up in that area. Thank you so much, Tamal, for joining us today and sharing your thoughts. See you next week.
While personal insolvency and bankruptcy law is yet to be stabilized and startups and entrepreneurs have to be encouraged, we also have to ensure that credit culture does not get spoiled. Coming to our weekly banking poll, here's what we asked you last week. Should credit card interest rates be capped? The majority of you, which is 86.6%, said yes, and 13.4% of the respondents said no. India's digital banking ecosystem has been fast evolving. Almost 50% of the country's digital financial transactions are done through UPI, short for Unified Payments Interface. As we continue to see a spurt in UPI transactions in our poll question this week, we ask you, should smaller UPI payments not require a PIN? Our poll is open from today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. Well, that's all we have for you today. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.